Hello and welcome. My name is Joe O'Mara. I'm the Head of Aviation Finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined by Peter Barrett. Peter is the CEO of SMBC Aviation Capital. He's joining us for the purpose of our Aviation Leaders Report for 2025, and we're recording this in late November. Peter, thanks as always for joining us. Before we get into the meat of the conversation, do you want to tell our watchers, most of whom will well know, a little bit about SMBC Aviation Capital?
Sure. Thanks, Joe, and thanks for the invitation. It's always, it's kind of like it's close to the end of the year when we have our annual chat. So SMBC Aviation Capital, one of the largest aircraft leasing companies in the world. We have a fleet of owned, managed and ordered aircraft of well over 1,000 airplanes now. Our portfolio is mainly young, new technology, narrow-body aircraft. We are owned by two of the largest institutions in Japan, the SMFG Group and Sumitomo Corporation. We have very strong ratings, A-, BBB+, and as I said, we've a global business, about 125 customers around the world. So a big, active aircraft leasing company.
And maybe we'll start on that customer environment, Peter. You know, we would have spoken 12 months ago about a pretty robust demand environment. How do you assess that demand environment at the end of 24, and how do you break it out geographically?
I would say the demand remains resilient and robust. I think when we talked 12 months ago, we were kind of in that euphoric post-COVID recovery period, and I think there was a sense of kind of, that everybody was rushing to get capacity and get their airlines back up and running and really get things going. I don't think you have that sense of kind of euphoria and manic kind of demand that you had, say, 12 months ago, but demand is strong and steady. And I think it's pretty much global. So we're placing airplanes. So we have a large order book. We also do a lot of sale and leasebacks, and we also buy and sell airplanes from other lessors. So what we see, particularly on the order placement side, is that there's good demand. We're placing airplanes in North America, in Latin America, in Europe, Middle East, increasingly into Asia. I was just back from Southeast Asia last week, where we just signed up 8 airplanes within a carrier there. So the demand is pretty resilient, and it's global. And lease rates remain good. I don't think their trajectory is quite as steep as it was 12 months ago, when you really had that momentum behind lease rate growth. But lease rates remain strong. The rates are good, and airlines recognize that they need aircraft. So they're happy to pay good rates for good airplanes.
And as you assess that demand environment and looking out into 25, if we think about macroeconomic or geopolitical challenges, they're just always there, right? Do you view those in any way heightened as you assess maybe your concerns around potential airline performance in 25? Or are we back kind of post-COVID to a little bit of business as usual managing risk?
I think it's more the latter. And I think as well, I think as an industry, if the last 3 or 4 years have proved everything to us, it's how resilient and how strong the industry is, even in a period where you can have events like a global pandemic and everybody stops flying, or a major land war in Europe and you lose a bunch of your airplanes are stolen. The ability of our industry to kind of see their way through that, I think, is being demonstrated very well. So it feels like business as usual. And the way I'd kind of characterize it in terms of our customers is that, as there were for the last 30 plus years I've been doing this, there's some winners and there's some losers. There's some airlines have great strategies, execute them well, have really strong management teams, and other airlines less so. And that's what you're going to have. And I think so. It's kind of back to normal, I would say. There's always going to be headwinds. I mean, in this industry, again, we've seen things like the first and second Gulf Wars, financial crash, 9/11, the events of the last number of years. There's always going to be events. That's just part of our industry. So I think we probably need to get a little less kind of dramatic about those things and say, look, these things are going to come along. You need to build your business to make sure that it's resilient, so that when those events do come along, you're able to manage them. And I think one of the things that I think I'm most proud about our business in the last number of years is that resilience, our ability to not just see our way through COVID and Russia, but also to take advantage of some of the opportunities that came across that were there in terms of opportunities for sale and leasebacks, M&A, and other things. So I think it's business as usual. Will there be challenges? Obviously you have a change of administration in the US, which I think everybody is waiting to see what's going to happen there. I think you've got other geopolitical changes, I think, around the world. You've got the war in Ukraine. So there's lots of things that can present challenges. But again, I think, particularly for a business like ours, I think we're well positioned to manage those challenges and also to take advantage of the opportunities that will come, because inevitably where there is change, there is opportunity.
Yeah, and maybe honing in on probably the big macro challenge the sector facing at the moment is around the supply side issues. So if we say demand is good, supply is particularly challenged, and obviously the Boeing strike is thankfully alleviated, but production rates, both for them and Airbus, aren't probably where they would like them to be. How does that feed in to your business? So as you think about those supply side challenges, large portfolio of aircraft, probably positive, but on the flip side, your order book presumably is getting delayed on you.
Yeah, I think it swings and roundabouts. It's positives and negatives. I would say obviously on the negative side, it is hard to manage your business and how you plan your growth. It creates a lot of friction with your customers and with your suppliers, because your suppliers are delayed, are having problems. Your customers are waiting for their aircraft. They have schedules, they have passengers to fly. So managing that dynamic between the two of them can be challenging. So I think there's definite challenges to it. Having said that, I do think, certainly when we think about our business now, our order book in particular, we're kind of planning for delays. So, we're managing our own expectations and those of our customers. So I think, certainly at that dimension, people are adjusting. So I think there are challenges there, but I think they're manageable. On the positive side, clearly, if you're an aircraft owner, you've got an order book, if you've got a large fleet of aircraft where there's a supply side shortage, it's good for our business. So we're seeing a lot of lease extensions. I think it's probably 90%. We see rates for lease extensions have improved significantly in the last, I'd say, 12 to 18 months. When we do move aircraft, and sometimes we will choose to move aircraft because we might say, well, we can get a better deal somewhere else, better T's and C's, rates are strong. So generally, I would say on a net position, I think it's probably benefiting lessors. It does bring challenges, but I do think it's as a big aircraft owner, I think it's probably a net positive for our business.
And in terms of your own interactions with the OEMs and managing your order book, how have you found that process, either from a communication perspective? Do you find you're finding out things in good time, or could that improve?
It can always improve. Communications in any aspect of business, both internal and external, is critically important. And certainly it has improved, but there's certainly more we can do as an industry in terms of talking to each other. Now, I would like to think that we have been supportive and constructive with all of our manufacturers in terms of what's the challenges that they face. Ultimately, we're not letting them off the hook, but we also recognise that we have a long-term relationship with these suppliers, and we need to find the right way to work with them. So it can't all be stick. There has to be some carrot as well. And so I think it's challenging. It's difficult. Obviously, things like the strike and the change of management in some of the big manufacturers produces an additional level of challenge. I also have, I would have some sympathy for them in occasions, because a lot of things are outside of their control, particularly for Boeing example in terms of the strike and the FAA. So, I do think they try and tell us what they can when they can, but it can always improve.
And to hone in on the point you just mentioned there on lease extensions, and not, as you say, surprising in this environment where lease extensions are breaching 90% and lease rates are materially up. Can you talk to us about airline engagement and the trend line around how early they're now engaging with you?
Sure, I think it depends on extensions or new aircraft. So
probably on the extension side.
On extensions, they're probably up to 2 years ahead. I mean, we are now having conversations with airlines around airplanes in 2026. So I would say, previously, certainly during a period of weakness, they'll play a short game and you'll go pretty much down to the wire. I think, going back to the previous question, I think everybody sees that these challenges on the supply side aren't going to go away today or tomorrow. I think they will get fixed. I think the system will get back to some form of equilibrium, but I think that's a number of years away.
End of decade still?
I would say end of decade is not unreasonable. No, it might be a bit, I would hope it to be a bit sooner than that, but that's not an unreasonable perspective. And I think in that context, airlines are saying, fleet managers are saying, okay, look, it isn't going to get materially better. So for example, if you're a Boeing customer after all of the delays and now the strike, you're looking at long periods of delays relative to your original delivery schedule. So they're probably saying the airplane I was going to get in 26, you got to push that way to the right. So therefore, the airplane I have in 26, I need to extend. So they're the kind of conversations we're having. So it's certainly a 2-year, I would say, 2-year window. Does it get longer than that? Probably not. There is a kind of there is a point that comes where I think that airlines, are finding it difficult. Having said that, I mean, we have, some aircraft in our portfolio now which are maturing in 27 and 28. Wide-body aircraft with a particular customer I was visiting recently, and they want to begin that conversation now because they're looking at the supply side, and this is a core part of their fleet. They need to start locking down and getting certainty in that. So it's a really interesting dynamic. On the new aircraft side, we are pretty much placed for 26. We're well placed for 27, and we're now putting airplanes away in 28. So again, that time horizon, that horizon, that length is getting stretched. Again, as airlines say, okay, I've got to make some decisions. Supply is limited. There are risks on the supply side, and the upside is uncertain, and that's in terms of improvement. So let's lock down a few slots.
And maybe bringing on to, you mentioned at the start, you guys have always been an active purchaser, but a very active seller of aircraft. What's your assessment on how the trading environment has evolved over 24, and just who are you selling mostly to?
Yeah, I mean, it's a really interesting question. I would say when the interest rate cycle turned, probably 18 months ago now, 2 years ago, I mean, I think there was a bit general concern. I would have had a concern that interest rates would perhaps slow down, the rise of interest rates would slow down the trading market. That hasn't proven to be the case, and I think there's a couple of dynamics behind that. One, I think capital still is relatively easily available, so I think there's plenty of investors of different classes, and I'll come back to that in a moment, around the world who want to deploy capital, and that hasn't got significantly reduced in the last couple of years. I think that, again, the point I made about the resilience of our industry, I think that's really landed with investors around the world. That, if you look at it, okay, we let's take the worst case we can. Let's take a global grounding of the world fleet and a major European war with the airplanes are confiscated and stolen. And how did this industry get on? And it got on pretty well. No, we didn't all make a lot of money, and we had to take some lumps in terms of losses, but it was pretty resilient. And I think investors are looking at that and saying, okay, this is a pretty good space to invest in. It's pretty, it's pretty resilient. You can deploy volume of capital. It's global. There's some good risk mitigants. There's the supply side dynamic, which is, I think, good at the moment from an aircraft owner's perspective. So I think all of those things are leaning into investors saying, okay, not only will we continue to look at this space, but we might do a bit more or might bring in new people. And, we've, I think, got the largest trading team in the industry, and that's a conscious decision on our part because we want to make sure that we've got a broad distribution of partners to trade with. So we trade with a wide range. We have a big trading market in Japan, obviously, because of our ownership. That's, I think, a significant advantage for our business relative to some of the other big lessors. We have we do a lot of trading with other, particularly mid-life aircraft investors, some of the bigger names in that space, but also some smaller players who are new platforms, setting up a fund or setting up a new business. So it's quite a deep market. We recently sold a couple of airplanes to a European investor, a first-time investor, in Europe, who bought 2 wide-body aircraft off us. Again, they hadn't traded and bought aircraft before. Again, they look at this space. They're a broad infrastructure investor in Europe, and said, okay, that's it. This is an interesting place. We like these assets. We like what you tell us. And so they bought some airplanes. So it's a very diverse space.
And are you seeing an increase in airlines seeking to buy assets from you guys?
Yes. I would say it's off a very low base. I would also say that typically we keep a pretty young average fleet age. So compared to some of our peers who might have an older fleet, we probably have less of that because it's probably not economic for an airline to purchase an airplane at 5 years old, but it might be at 15. We don't have a lot of 15-year-old aircraft, but we are seeing some of that. I mean, more than we would have seen. I would say we've probably sold a dozen aircraft, in the last 12, 18 months to airlines. So it's definitely more than it would have been historically, but it's not. I wouldn't see it as being the majority of our aircraft trading.
No, that's understood. And if we maybe move on to the liability side of the balance sheet then, Peter, can you talk to us a little bit, maybe we'll start with interest rates, right? and a well-run leasing business is typically a very hedged business. So as you see rates, spike very quickly in 22 and 23, steady a little, and then slowly start to maybe tick downwards from here. How does that impact on your business, or does it have a material impact on your business?
I suppose the first thing I say, we're not interest rate traders, okay? We're aircraft investors, so we're not in the business of taking punts on interest rates. So we would hedge, and we have always hedged our interest rate book. So we hedge both for duration and for rate. So we match our basically we'll match our assets with our liabilities in very broad sense. So what we call our funding gap, which is the difference between our average lease and our average funding, is less than a year. And that's a conscious decision on our part. So we want to avoid that position where if you aren't hedged properly, if interest rates rise and you refinance your book, your basically your margin is going to get compressed. So we're managing our business to ensure that we have a consistent margin regardless of the interest rate. So I'm not going to try and predict interest rates. I mean, I think the one thing that I have learned over the last number of years is that lots of expert people who can predict them, they don't do a great job of it. So, I don't think we can say with a great certainty what's likely to happen. But what I can say is that we will continue to hedge our interest rate and our liability side to ensure that we can preserve margin on our lease book, regardless of what the interest rates do.
So I take that point totally, and as you say, it's not irrelevant, but it's well managed. If you look at more broadly across the sector, though, do you think as a very large lessor and say, well, a slightly heightened interest rate environment, is that net positive for someone like SMBC Aviation Capital?
Yeah, I mean, I think, yes, probably. I mean, I think as a large investment grade, with strong financial backers, I think a more, shall we say, a higher interest rate, perhaps slightly less generous market than it might have existed, say, pre-COVID, when there was, cost of money was virtually free. I think an environment where there is more of a realistic price of money, I think, is better for somebody like us. No, we want to have a liquid market. We don't, certainly, if there are periods of illiquidity, that gives us opportunity in terms of buying, because we will hopefully have access to capital when others don't. But having said that, in the long term, we like to have a liquid, financial market, because that's going to encourage trading and other investors, and facilitate us in our funding plans. So, but I think it's fair to say that what I would consider today a more normalized interest rate market compared to pre-COVID is better for a big leasing company like us.
Yeah, and then if you look at kind of the broader aviation debt market, can you talk to us maybe around the types of products you guys are typically availing of, and your overall assessment of the health of the aviation debt market?
Okay. Well, I suppose the first thing I would say is that as a single A-, BBB plus investment grade leasing company, we have probably the broadest range, one of the broadest choices in the industry. We also are owned by a very strong financial institution, so we have a potential to use our support from our shareholders as well. That we typically keep, I suppose, as dry powder. So at the moment, about 1/3 of our funding, a little bit less in fact, comes from our shareholders. And the balance then comes from the broader financial markets. We do bond issuances, so we did a 1.5 billion, 5 and 10 year earlier this year. We've done a number of unsecured global debt facilities, bank facilities. We just closed one, I think it's at the end of the summer there, for about, I think it was about 1.5 billion. So we tap into all of the unsecured markets. Now, I would emphasize that it's unsecured is important, because we think that gives us flexibility in terms of how we manage our business, how we manage our book, in terms of our trading. And that's a luxury we have as an investment grade company. We look at all other products, so we've looked at lots of different things. There's products in the Middle East, there's secured products, and I think it's incumbent on my colleagues and myself to stay abreast of that and make sure that we understand all of the options. But in most circumstances, we will lean into the unsecured bond markets, the debt markets, and our shareholders for funding.
And from a spreads perspective, have you seen any variance in maybe where they were a year ago, or even maybe where they were pre-COVID?
I would say that a year ago, they've certainly for us, they've tightened. I think the margins are better. And I think we're kind of getting back to where we were pre-COVID. I mean, I do think, I'd have to check back in my head here now, but I think, we're probably a handful of points off, probably the low point of the last cycle in terms of funding. So it's a good market. There's plenty of liquidity. The bond markets have taken the US elections and the outcome in their stride. As I said, there's plenty of dollar appetite in the bank market, particularly in the Middle East and the Far East. I mean, that's been a good market for us. We've built some excellent relationships with some really good institutions in the Far East and in the Middle East. That's been very valuable. So I would see I wouldn't say benign. That's not a great word, but I think it's a good market at the moment for funding aviation sector. Now we're in a place where, as I said, we have the luxury of being in a position of strength. I mean, I'm sure you're going to touch a little bit about the ABS markets, which has been a market for others. So I think it's horses for courses, and it's not the same for everybody.
And maybe we'll take that ABS point now. I sometimes feel we spend maybe a disproportionate amount of time talking about a market that at its height funds about $10 billion, but is sparking back into life as of now. Probably still haven't seen an E-note market since early 20, right? But your thoughts on the importance of that market and whether it's a tool that you guys might use, clearly not for funding, but in building out the kind of managed book if it came back in a real way.
Yeah. Look, I mean, I think your first comment is a good one. We spent an awful lot of time talking about ABS, and I understand why there's plenty of people who would want us talking about ABS because it's an important business in terms of banks and lawyers and service providers. But it is a relatively small market compared to the overall size of the aircraft leasing market. I think it is coming back, and we've seen a couple of deals happening. I think there's still a journey to go on that, and we see this in every cycle. So we see the cycle where pretty much close to the peak of the market, people do full capital structure deals. The market event happens, the market turns down. The ABS market dries up, and then it slowly builds back up, people doing A notes and then A and B notes and ... And we're in that process at the moment. I think it's always going to be, in relative terms, a relatively niche market compared to the overall scheme of it, but it's going to be important. And it's particularly important for that liquidity I touched on earlier. I think it's important that there is access to capital for a wide range of types of investors, and ABS is an important tool in that regard. So I think it coming back to health and coming back to breadth and scope and scale, I think, is important for all of us. In relation to ourselves, I mean, we did one ABS almost nearly 20 years ago now, but certainly 15 years ago, which we sold a bunch of airplanes, and we saw it right through to the end of the maturity of the ABS. We manage another one at the moment, which was part of the Goshawk acquisition, and we've looked at the market pretty consistently over the years. We've looked at it seriously probably once or twice in the last decade, but we've never got the economics to work for us. If it's a good buyer of aircraft in terms of the total capital structure, in terms of achieving what we want, in terms of selling aircraft, developing, as you said, an asset management book, and servicing or delivering for us what we want, then I think it's a very viable option. Personally, I think we're a couple of years away from that yet in terms of getting away the full capital structure. But these markets tend to turn pretty quickly.
Yeah, and maybe to bring you back at a point you briefly touched on the investor base, and that theme you were chatting around, the resilience of the sector. So it's a bit left hand, right hand on this. And on the left hand side, you got an outsized impact from COVID, outsized impact from Russia. The right hand side, tons of resilience, profitability, strong cash flows. If you were to ask a question as to whether aviation finance is more or less or about the same level of attractiveness to equity investors versus 5 years ago, say take it 29 as our base year, what do you think?
Oh, that's a good question, Joe. I think it depends on what your return criteria are, frankly. I think if your expectations is mid to high teens return, I think this is it's a hard conversation. I think if your expectations are kind of low double digit returns, then I think it's a pretty attractive space. No, it's over time and you've got to manage it. But I do think for investors this is a good business. I don't think it's going to blow the socks off your return criteria, but I think the downsides, as we've demonstrated with the resilience, if you're able to hold the asset and manage the asset and work through the downside, I think it's there's limited downside risk in this industry if you can hold the asset and you're not a forced seller. So I think it remains probably for the average investor, I think it's probably increased its attractiveness, I would say, because it's been tested and shown to be resilient. And also, I think it's become more mainstream, if that's the right word. So I would say that on balance, it's become a more attractive industry. More attractive industry for investors.
And maybe picking up that mainstream point, does that mean, and this is really maybe a broad question on the nature of investors coming at the space, where you have that resilience and you have that proved kind of steady return, if I call it that, does that mean you're attracting more institutional capital? Have you seen any interesting trends in the nature of investors?
I think probably yes. I mean, we have a lot of conversation with the different types of investors. I mean, you know that we did a joint venture with CDPQ and last year, which we're really pleased with. A great partner, very much an institutional investor, with I think a really good alignment both in terms of their objectives, the type of business they are and we are, and I think there's a really good simpatico there. So I think we have, I think again you're going to get a wide range of investors, and look, I think it's one of the things about our industry. There's kind of something for everybody. If you want a higher return, you can play in 15, 20-year-old airplanes, the breakdown, green time. There's lots of opportunity there. There's more risk there as well. So I think so it's an area where you can have a wide range of different types of investors who can play in different both parts of the capital structure and in parts of, I suppose, the asset life. And that kind of two-dimensional world, I think, is really helpful for our industry because, depending on what kind of money you want to invest, you can find a place in that grid to invest it. And you'll get everything from big investors, institutional investors, as I mentioned, like CDPQ and others. But you'll also have, more specialist investors. You'll have hedge funds. You'll have Japanese investors. So it's a very wide church. And I do think that kind of two-dimensional grid in terms of both capital structure and time, asset life is really interesting.
And can I ask, as you're having conversations with either investors into your debt or your equity side, are they asking about climate? Are they asking about carbon? Or is that actually having an impact on your ability to attract investment or the price of your debt?
I think in answer to your first question, I think yes, I think it depends on the investor, but I think people are asking about it. I think it is important. I think we're now in a phase of the whole environmental question and sustainability question of, I suppose, the not the easy work, but I suppose the foothills of recognizing it and kind of quantifying it, doing some reporting. We've done a lot of stuff around TCFD and other types of reporting. Those conversations are not easy, but they're kind of they're things that are kind of you can win relatively quickly in terms of saying, okay, this is what the challenge is. The next part is actually how do you address this? And that's a difficult conversation. As you know, there was a conference here in Dublin about it a few weeks ago. I think the title of the conference was Reality Bites. And I think that's reality. I think that's a fair summary of where we're at in our sustainability journey. In SMBC Aviation Capital, we believe aviation is a force for good. Okay, we think it's a good thing in the world in terms of economic and social good. Aviation is a positive thing, and we saw that post-COVID. People want to get back flying soon, but we have to find a way to do it in a sustainable way, and that's going to take us time, and that's going to be I think a long journey, a decade's journey. It's not just going to be about one individual company or one individual technology, one individual solution. It's going to be a combination of things. But having that conversation, come back to your question, having a relevant conversation with investors that's important to, and being authentic about it and having a perspective on it, I think remains very important. It's not for all investors, certainly. Does it impact our ability to raise funding? I think having a front-footed, positive perspective certainly doesn't do you any harm. We have done some sustainability-linked loans, which are relevant to both the E and the S part of ESG, and that's been successful for us. It's a small thing, but it's a start. So I would say.
Can I ask on that, Peter?
Sure.
Is that just linked to kind of pretty much the fact that you're funding very new fuel-efficient aircraft? Is that the key driver on sustainability linked?
Yes. So it's linked. It's linked to effectively the carbon footprint of our assets. So so the better our portfolio, and it's a marginal improvement, but there is some improvement in terms of the cost of our funding. There's also a a social thing, part of it in terms of our diversity of our team. That's important to us as well. I know it may not feel that there's a bit of a tie going out against that at the moment, but I think we certainly believe that diversity and inclusion is important to our business. We think it makes us a better and stronger business. So that's one of the things we have in some of these sustainable linked loans, SLLs, as I think they call them. So, but look, it's again, we're in the foothills of this challenge and indeed this potential opportunity. I mean, yes, it's a challenge, but we also see opportunity, for example, in the area of sustainable aviation fuel, which we think has a real role to play in the next, the next number of decades. We think as a big aircraft owner, having a drop in fuel that will make our assets more sustainable is a good thing. And we're working on ways to support that development of SAF. Can we do it by ourselves? No. But we can help. For example, we've just opened, in conjunction with Trinity College here in Dublin, in our new office, a sustainable aviation fuel research facility, which we're really excited about. We've got a significant piece of work going on with our shareholders, obviously who are big investors and big project finance people, on how we can work with them in playing a role. So this is not binary, and it's not fashion. I mean, this is something we need to address in the long term, and it's going to be a consistent part of our business for the next number of decades.
Yeah, the reality bites thing is interesting, and political change in the US will be interesting to see how they play into the agenda more broadly as well. Yeah. If we shift gears and maybe look at the wider leasing environment, Peter, and can I get your thoughts on, are we moving, if we think about the population of 10 or so investment grade lessors, and we've talked in the past about the importance of scale. Is there a world where, with OEMs maybe tightening their supply into very large lessors, where access to the cheapest funds is going to become more and more important, that we might end up in seeing a contraction at the very top level? So instead of maybe having 10 or 12 investment grade, or those seeking to get investment grade, we end up in a world with just 5 super side lessors and everyone else kind of playing in a niche. What are your thoughts on that?
I think that's a realistic potential scenario for the future, and one that certainly would align with certainly what we think is likely. Look, I mean, inevitably, as an industry, any industry matures and develops and commoditizes, it's going to consolidate, and it's going to be a smaller number of bigger players. The analogy I always take, and it's familiar to me, is when I first went to Japan with GPA probably 30 plus years ago, the early 90s, there were, in GPA's revolving credit facility, there was something like 60 Japanese banks, okay? There was a lot of Japanese banks. Today, in reality, there's 3 big Japanese banks, one of which is our shareholder. And you see that across many different markets. You see it in banking, you see it in accounting and the services industry. I mean, probably when I started, there was the big 8, and now it's the big 4. So I think that journey is inevitable, and I think the benefits of scale are real. I mean, the comment about the manufacturers and their attitude to it, certainly, even if you look at it today, there are less lessors on the order book today than there were 5 or 6 years ago. I mean, I don't have the stats to hand, but it has certainly gone down by a material proportion, probably from mid double digits to probably high single digits. And I think that's part of that is the manufacturers recognizing that they can't spread their sales too widely in the lessor channel, recognizing that there is benefits in scale and strength in their counterparties. So I think it's that trend is going to continue. So I think your hypothesis of a smaller number of larger lessors is the likely outcome in 5 to 10 years' time.
So I guess, Peter, if you take that theory that it will follow through, there'll be a natural way that some of those lessors will grow. If we say they have the order book, they'll grow, they'll be more competitive, so they'll be more successful around sale and lease back. The third leg of that is probably inorganic M&A type growth. You guys obviously undertook the Goshawk acquisition a couple of years ago, and that was kind of its type nearly of what we've seen in the last 4 or 5 years. 100 to 150 aircraft, Goshawk, AMCK, Standard Charter. Is that an area you see opportunities for SMBC to play again in from an M&A perspective?
Yeah, look, first of all, I think that zone of the market is where there's going to be a lot of activity. And you've seen that, and Goshawk was probably at the higher end of that, and there's, but somewhere between that kind of 2 in 10, I would say. That's because you have, those businesses have perhaps the challenges of being big, but not the benefits of being big enough. And I think that can be challenging. So I think you're going to see more of that. And look, for SMBC Aviation Capital, clearly we have grown our business with orders, we've grown our business with sale and leaseback, with trading, and we've done M&A. So all of those options remain on the table. We will be disciplined. So we think that value and fit and portfolio and executability is important. I also think it's one thing to have a willing buyer. You also need willing sellers, and I think a lot will depend on the strategies and decisions of the owners of these businesses. So, for example, when we bought Goshawk, there was a clear decision on the part of the owners of Goshawk. Okay, we've brought this as far as we can. We have other needs for capital in the group in terms of their wider business. So the right thing to do was to sell that business. I think that conversation is going to be driving a lot of these decisions. So I think a lot of the owners of leasing companies, and we've seen this over many years, right up to the very biggest ones like GE when they've sold GCAS, the key driver is not just the willingness and the ability of buyers to buy, but the willingness and the ability of sellers to sell. It sounds obvious, but I think sometimes we don't talk about it enough about that part of the equation. But to go back to your question, as I said, we're fortunate. We've an excellent balance sheet. We've got a strong rating. We've got very supportive shareholders. So if we see the right opportunities, we'll certainly look at them. But ultimately, these need to be deals that make sense for us.
Yeah, Peter, excellent insights as always. Just in closing, and I always like to ask this, as we sit here in late 24, looking out into next year, what are your optimism levels like?
They're good. I mean, as we touched on it earlier, Joe, there's always clouds on the horizon, but the sun is out there as well. So I think you've got to be optimistic. I mean, I think we're still in the kind of strong part of the cycle. I think there's a lot of good tailwinds for our industry at the moment. We've touched on a lot of them around supply, demand, technology. There's plenty of things there that are going to, I think, be a decent wind behind our backs. There will always be black swans and uncertainties, but I would be optimistic. And what I'd be most optimistic about is, regardless of what comes down the road, a business like ours with a great team, great shareholders, great portfolio, we will be able to manage what comes around the corner. So whether that's a storm or sunshine, I'm happy that we're in a good position to make the most of it.
Well, Peter, on that optimistic note, on behalf of KPMG and Airline Economics, I'd like to thank you again for your time and wish you and SMBC Aviation Capital a very successful 2025.
Thank you, Joe.